What's good, family? Welcome back to Investing Uncomplicated for everyday investors, making your money in the market make sense. I told y'all when we started this channel that I want to provide content that was for the everyday person looking to build wealth in the stock market. As we've launched our first month of the channel, we've gotten amazing feedback. You guys have subscribed, you have shared, you've done all the things that you should be doing. And in the midst of that, y'all have been reaching out to me as well. I read your comments, I get your emails, and I'm getting a ton of questions from beginners about how to get started in the market. So, this is what we're going to do with this episode. I didn't come with my own agenda. I didn't come with the topic that I wanted to teach. Today's episode is driven specifically by the questions of our subscribers. I am going to answer 10 questions. Yes, 10 questions from people who subscribe to the channel and to give you the answers that you need to launch or to further your investing journey. If you're a beginner and you have questions, there's somebody else that's a beginner that probably has the same question. So I think this is probably going to be one of my favorite episodes that we've done so far. So that's what we're about to do. I'm going to jump straight into the questions. And number one, I love. This is from somebody who's been following. They love the content. They recognize the importance of investing. And they just said, hey, Courtney, how do I start? I want to invest, but how do I go from interested to actually investing? And I am going to give you the steps. Step number one, you have to have a digital broker in order to invest in the stock market. This is a mobile application that you use where you actually make your investments. This is what connects you to the market. Okay, so think about this as Amazon for stocks. Okay, the one that I recommend for beginners is Moomoo. There's a link to Moomoo in my show notes. Go there, click the link, download Moomoo, create your account. It's just like setting up a social media profile. You'll need to transfer some money. Transfer like $100. That's perfect to get you started. With Moomoo, one of my favorite things about this application is you can invest with as little as $5. So you can just get your feet wet making investments of like $5, and that'll allow you to buy a fractional share. So we think about a share of Microsoft, okay? It may be a couple $100, but you can buy a piece of Microsoft, and that piece of Microsoft, that fractional share, will go up just as much as a full share of Microsoft. All right, so step one, download your digital broker. Step two, set up your account. Step three, transfer at least $100 in there. Step four, you can buy a fractional share with as little as $5. Then it's like, well, Courtney, what should I invest in? For beginners, I tell you to start off with VOO, VOO. This is the S&P 500, largest, best 500 companies on the stock market. That gets you started. From there, you got to stay tapped into the channel, and I give you other things that you can do and invest and make more money and build more wealth. All right, so that's question number one. Great way to start. Question number two, how much money do I need? Again, you can start investing with as little as $5. $5 a month gets you invested in the market. Now, somebody's like, well, Courtney, $5 a month isn't going to make me wealthy. The amount of money isn't going to make you wealthy. I'll admit that. What's going to make you wealthy is the habit. It's the consistency. It's automating it. It's staying tapped into the market and what's happening. Okay, that's what's going to make you wealthy. The $5 a month gets you started. It builds familiarity. It gets you looking at the stock market, all behaviors that you currently aren't doing. But then what's going to happen is you're going to figure out how it works. You're going to get more comfortable. You're going to put more money in there. You're going to get a raise at work, and you're going to put some of that money in there. You're going to get a bonus, and you're just going to get to a point to where you have a system to where anytime you get some extra money, you want to put it in the stock market. Because let me tell you something else that's going to happen when you start off with $5. You're going to see that $5 grow. And when you see $5 grow, you'll be like, ah, man, I got to figure out how to put some more money in this. And that's where the wealth building starts to happen. All right. Question number 3. How do I keep up? Like, okay, Courtney, I see you on YouTube. I see you on Instagram. I hear you talking about investing. I see the headlines. I see Oracle just went up 40% last week. I see Google stock shooting up in a day. I hear them talk about the Federal Reserve cut interest rates. There's all of this information. There are 10,000 stocks traded on the stock market. How do I manage all of that information? Here's the deal. It's not your responsibility as an investor to keep up with everything that's going on. I tell people in my community all the time, you don't need to know everything. You don't need to know all of the numbers, all of the analytics. You just need a system that works. You don't need to know all of the charts, all of the patterns. You don't need to keep up with the earnings from every company on the stock market. You just need a system that works for you. So this is what I recommend. I recommend finding one news source that you like for information. I really like CNBC. I look at CNBC probably 3 times a day. Okay. That's your news source. That keeps you educated. I recommend you finding a financial expert who you like how they teach, you like their content, you're engaged, you're learning, you're interested. I recommend you do that secondly. Okay. Get you a digital broker that you're comfortable with, that you enjoy using. Fourth, check your investment accounts once a quarter. Look, this is a community for the everyday person. Okay, we're not day traders, even though I do some of that. Okay, you're not trying to flip stocks fast. You're trying to build wealth. You can check your portfolio once a month. That's it. Don't overcomplicate things. Don't, because let me tell you, what happens is people see so much information, there's so much going on, and you get that analysis paralysis. Like, we're about taking action. Okay, we don't have to look at all of the data, all the information, all of the setups. That's not necessary. There is pretty clear on what's a good company and which companies are going to grow. And y'all have heard a lot of that through this channel. Do those things consistently. Find one news source, find one financial expert, check your investments once a month. Stay tapped into a community that you believe in. That's all you have to do. I love that question. Number 4, I have a 401k through my job and I have a Roth IRA. Which should I contribute to? Both. Both. You should be contributing to both. And let me tell you how this should work. With your 401k on your job, you should only contribute up to the amount that they match. After you've contributed up to the amount that they match, you then want to contribute to your Roth IRA. Let me tell you why. Whatever amount that they match, that's free money for you. So if you contribute $3,000 a year to your 401k, your employer is going to contribute another $3,000. That's free money. So you want to get as much free money as possible. Now, after you've reached the match, don't keep contributing to the 401k because your employer, they have limited investments that you can choose from, and sometimes that can impact the growth of your portfolio. So that's when you go to your Roth IRA. I like the Roth IRA because that's after-tax money you're contributing that's going to grow tax-free when you start pulling the money out at retirement. Tax-free money. We like free money wherever it comes from. You can contribute up to a certain amount per year in that Roth IRA. You max that out. Some of you are high earners and maybe you make too much to contribute to a Roth IRA. In that situation, you want to do a traditional IRA. And then there's some things you can do. You can convert your traditional IRA to a Roth IRA so you can get those benefits. If that's something you're interested in, give me a shout. I'll tell you how to walk through that. So start off with your employer 401k up to the match, then go to your Roth, max that out. If you make too much for the Roth, do a traditional, max that out through the traditional, and then you can do a conversion to a Roth so you can get the tax-free benefits. 5th question I have, what is the best investment for my first grandchild? I love this. This is about legacy building. It's not about you. It's about what you can do for your grandchild. I like to think about growth because I'm thinking that this is, I didn't get an age, but I'm thinking that this is a new grandchild. The question, the tone of the question, it comes, there's a sense of pride and joy and happiness. And that normally comes when that grandchild is new. All right. I don't think this is a 17-year-old grandchild. I think this is probably a grandchild that's younger than 3. And if they're younger than 3, you have a lot of time. When we have a lot of time, we want to invest aggressively. We want to invest in growth stocks or growth mutual funds. The one that I am going to recommend is VOOG. This is one that I like. VOOG. These are the fastest growing companies in the S&P 500. Now, earlier I talked about beginners starting with VOO. That's about 500 companies. VOOG is about half that number of companies because it's only focused on the companies that are going to grow the fastest. And with a young grandchild, you have a lot of time. And so we want that money that you invest to grow fast over the years. Question number 6, how do I sign up for your beginners class? Listen, if you're interested in signing up for my 5-week investing program, there's a link in the show notes for you to register. Look, this is 5 weeks that gets you invested in the market. I make you a promise where you can make your first informed and strategic investment. You also get 2 months access to my Investing Uncomplicated exclusive community. So find that link in the bio. Number 7, what's a good app to start investing? I mentioned this when we first got started. Moomoo, there is a link in the show notes for you to download Moomoo. Download the app, create your account, transfer $100. You're one step closer to starting to invest. Number 8, how do you read charts and indicators? I love this question. Let me give you the basics of reading charts. So when you look at a chart, this is the historical price movement of a stock for a period of time. On a chart, you can change the timing to where every candle is a day or maybe even 5 minutes. The reason why we use charts is because we can look at the past movement of a stock price and it can tell us about how that stock is going to move in the future. We can also add indicators. Indicators are kind of like road maps for a stock price. The indicators can give us an idea as to what direction a stock's price is going. Across the x-axis on a stock chart, you have your date. Along the y-axis, you have the stock's price. In the center, you have candles. Candles are green and red depending on if the stock's price is up or down for the time period that you're looking at. You can look at a chart for a specific company and you study the charts to help you make a decision on when to invest and also when to sell your investments. I do teach how to read charts in my technical analysis lesson, which is week 3 of the beginners investing program. This question, how do I feel about REITs? So REITs are a type of mutual fund that are only invested mostly in commercial real estate. People like REITs because they have a really high dividend. Typically, the dividend on REITs is 5% or higher. And it sounds great because those REITs are required to pay out 90% of their profits to their investors. The problem for me is, guys, I'm a growth investor. I like to put an amount of money in the stock market today, and at some point in the future is worth a lot more. REITs don't grow like that. They really, most of the time, they stay flat, and a lot of them actually lose value. And I don't like them for that reason. Now, there are people at a certain point in life where they need their assets to actually make them money, specifically retirees or people who have a lot of money to invest. And I mean this with all seriousness. Like if you have $1 million or more to invest in the stock market and you just want to create income for yourself, REITs could make sense. But if you were to take that money and invest it in growth stocks or growth mutual funds, they're going to grow at a rate that's going to be more than you're going to get off the dividend of a non-growing REIT. So for that reason, I'm out. Y'all seen that on Shark Tank. They be like, for that reason, I'm out. Yeah. So for the reason of REITs not growing and sometimes losing value, I don't invest in them. And then the final question, what is the best account to set up for my daughter? So I'm going to answer this in a few different ways. I think this question I read differently than the question I got earlier about the best investment for their grandchild. So when you think about best account for my daughter, I think of this in a few different ways. I think of it as like, one, I want to have money set aside for my daughter for some point in the future. Some people think of like 529 plans. So a 529 plan is basically like a retirement account, but instead of it being for retirement, it's for college. So you can open a 529 plan for a family member or for a youth in general. All the money you contribute will grow, and there are no tax consequences when the funds are used for college. Because of that requirement that is used for education, sometimes I'm not a big fan, especially when we're talking about really, really young kids. Because I do believe what we look at in terms of college and traditional way that we've done college for the last 50 years, I believe that's going to change. And I do believe that we're going to see a lot more students not pursue college. And so then you have to figure out what to do with those funds to avoid the tax implications. So then there is what's called an UGMA account, which is a uniform gift to minors. This is a type of trust, a type of fund that you can create for a minor so that at some point in the future, they can access those funds that you've invested on their behalf. So that's a second way that you could set up an account for your daughter. And then the third way that I interpret this question is my daughter is interested in learning about investing in the stock market. How can I teach my daughter to invest in the stock market and give her some hands-on experience? And in that example, the best account that I've seen, especially for teenagers to learn to invest in the stock market, is through the Fidelity Teen account. There has to be an adult that goes on the account with them, but the teenager can learn through hands-on experience how to invest in the stock market. And I think that's a great tool to use for a young person. So there is an account to invest for college. I gave you an account to invest generally for the benefit of the minor to use the money however they want. Then I gave you an account that could be good to use for educational purposes if a young person wants to learn hands-on how to invest in the stock market. Y'all, these are great questions. Make sure you continue to send me your questions every month. I'm going to do this. I'm going to take some time, take questions from our audience, and I'm going to answer them. And that's going to be our episode, guys. I love this. Look, as always, guys, thanks for tapping into the Investing Uncomplicated show. Be sure to subscribe, like, and share this episode with somebody you love. I'll see y'all soon.